reaction to what was a pretty tame statement, I thought. So basically, what the Fed said, as I read it, and you guys tell me if you read it differently, the statement from the Fed was that there's basically no change, and maybe in 2 years they might tighten a little, one or two times, if it was even that. And then gold and silver just had this ridiculous overreaction and just fell like a rock. Here was the silver reaction. It was around 27 and then fell all the way down into the 25 range over the course of Wednesday, Thursday, and stabilized a little on Friday. And gold's reaction was even more dramatic. Just falling like a rock. What do you make of this, Mr. Morgan?
Well, I've got two things to talk about. One is the interest rate, and the other's the objective reality. So let's start with the interest rate. The way I read it, Jim, and I think you're close, I'm just tweaking it slightly, was, this potential increase in interest rates it's killed the gold and silver markets. And you see the reaction. The reaction is there. It's a fact. I'm not going to deny it. But on the interest rate reality, here's the deal. The only way that interest rates, quote unquote, kill the gold market is when the real rate of return is above the inflation rate. So you go back to 1980, which is a classic example of exactly what happened. The reported CPI at that time was 13%. And Volcker came in and killed gold by raising interest rates to 20%. Well, I think we can do the higher math in our heads. 20 minus 13 is a 7% real rate of return. That's the real bond yield that you got. And in fact, us gold bugs, and I was really young and involved and enthusiastic, and I didn't do the right thing right away. One of my friends did, sold all of his gold and bought the long bond, locked in like 17.5% for 30 years. Not a bad trade, especially as interest rates decrease, the bond prices go up. So probably the best trade you could have made for a 30-year trade ever. That's the reality. So on that basis, we're sitting at about a 9% real inflation rate basis shadow statistics from my friend John Williams at shadowstats.com. So to have a real rate of return, you would have to have an interest rate beyond 9%. But if we even use the Fed's round numbers, and Jimmy can help me out, but I'm just going to round it to about 3% currently by the metrics that they currently use, you would have to see an interest rate in their reality of 4 or 5% to have any meaning of quote unquote, and I would call it a fake real return. So really the whole interest rate thing is a bogus argument as far as what really happens in the gold market. Okay, now the second one was what I would call the objective truth. And here it is, and I'm fired up. This was futures driven. I checked the trading desks in the US and Europe, not every one of them, but enough to know, and big ones. Nobody was selling physical. It was all on paper. And this exact reaction would have happened a week before, a week after this announcement. The only reason that people are believing it has to do with the Fed getting a hawkish stance is because of the timing. But this exact reality would have happened a week before or a week after. It's all about the amount of selling pressure or buying pressure. Mm-hmm. Now, in the futures market, you can sell as much as you want of stuff that doesn't exist. Think about that. You can fabricate a reality that isn't in reality. In other words, you can make up as much silver on paper as you want and throw that into the market. Now, the futures market works on the contract. It doesn't work on how much physical silver is in the exchange. The only time it works on how much silver is in the exchange is when the exchange is so low on silver. It could be a vast amount. It's a function of how much silver is coming off the exchange on the demand basis versus the physical reality. So it's purely a physical market. Palladium is a classic example. Palladium moved up because it's meeting the physical requirement at roughly $2,500 to $2,700 the ounce, and it doesn't waver too much. Now, it got killed at the same time. What changed in the auto industry to pushed palladium down $300 on that day? Absolutely nothing.
Mhm.
What took place was about a bunch of futures players, especially what I call the tag-alongs, that are not like the biggest banks. Some of the biggest banks could have been involved, but if you could push gold and silver down, which are still small markets relative to, let's say, oil,
Mhm.
then it's easy to tag along with platinum, palladium, and get basically free money. So it's all futures driven. It's not reality. It would have happened on any given day basis, that amount of selling. So the interest rates was a ruse, a red herring, a let's brainwash the public into thinking that our big power of ability to move interest rates will change the gold market. It can, as I explained earlier, when it's a real change via the true inflation rate, but we're not even close to that. So I'll turn it over to you. I'm pretty hot. It irritates me, but I think the most important point is it could have happened on any day basis the amount of paper sold.
So the premise here is that they probably just used the Fed meeting or the Fed statement as an excuse as their timing for their trigger to start spoofing or whatever little tricks they have to start playing with the price via the paper market and not the actual physical. Would you concur, Mr. David Stein?
There's other interesting things that that go on when you're looking at the precious metals market, and it's always hard to see what's what's the engine driving the bus. One thing I look at is the U.S. dollar, and it's moved up sharply. The U.S. dollar index in the last few days, really coinciding almost one for one with that drop in the gold price and also the silver price. And the U.S. dollar is in to me, it looks like it's in a secular bear market, which, you go back to, I guess about a year ago. But we're having a bear market rally and then, basically vice versa happening in gold and silver. It's something that, that happened over and over again in the market of 2001 to 2011, which was a 10-year bull market. But we had these setbacks, and we'll probably have a few more on the way to $50+ silver.
Happy, what are you thinking?
Yeah, I mean, I definitely agree with a lot of the sentiments that have been shared so far. I do think the moves were overdone short term, in my opinion. I mean, you can look at basic indicators like dollar RSI on the daily chart being close to 80, and it's pretty high relative to where it's gotten over since this bear market began. But it is approaching that resistance, so it could come further. But it definitely seems overdone in terms of percentile moves of gold and silver relative to movements in the dollar as well as real rates. But I'm not going to try to be the premier technical expert. I'll present a metaphor. I think if I'm known for one thing on Wall Street Silver, it's probably a lot of metaphors. But the way I read that Fed statement was kind of like looking at a 500-pound man who needs to lose weight, and everybody is telling him he needs to lose weight. He's eating 10,000 calories a day. So 300,000 a month. That's that 120 billion. And all he said in this announcement was, I'm going to continue eating 10,000 calories a day for the next 2 years. And then I'm going to go on a diet, maybe. and everybody is selling McDonald's futures because they think this guy's going to stop eating 80 Big Macs in 2 years. So, and this is the same person who 20 years ago probably was a normal weight and then ballooned to 350 pounds and kept saying they were going to go on a diet. And every time they do, it only lasts 2 quarters or so before he inevitably quits and then just keeps ballooning higher. So I don't know if if I'm watching a TLC show about a morbidly obese person and do I trust that in 2 years they're telling me they're going to gain another 150 pounds and then go on a diet and then everything's going to be fine? Like, I think the heavier they get, the less likely it is they're ever going to be able to actually even get out of bed and start moving and go, lose weight. it's a downward